All right, investors, I want to talk about Alibaba today, ticker symbol BABA, which is an ADR VIE structure instrument from China that we're not going to spend too much time talking about. And mainly, I'm going to do an overview and risk the company and try to figure out and answer the question, is the company really that good of an investment? Are there better opportunities in China? Is the company still as bright as it once was? Is the future still bright ahead of us, or is it dimming up? Are clouds forming? No pun intended in the company. So, first and foremost, a little overview of Alibaba. It's one of those internet companies from China that were looking for capital in the late 90s, early 2000s, and they managed through complicated instruments to provide profits contracts to investors outside of China, because investing in China is, as a foreigner, is illegal. So they managed to form this, structure through the Cayman Islands that distributes profits to investors outside of China, but not voting rights. And so that's how they've been operating. Currently, the system still stands after many, more than 2 decades now of contention. So the risk of that going away is diminishing day by day. There have been some scares in 2018 that I can think of, for example, and in 2020. However, the structure is still there. People are still investing. There was this fiasco with Didi, right? That had to delist because the government told it to. So there's been some instances that kind of like, okay, is the whole thing falling apart, or is it going to stand? So the risk of that at the moment seems fairly low, but we have yet to see. Now, this is the website of Alibaba. It has presence in almost the entire world. It's got the biggest customer base in the entire world out of any other company. So the company is very, very big. This is the US website here. You can search whatever kind of products you want. It recommends things for you. I was looking at some tents and now it's giving me all kinds of crap related to that. So it's got that, search tracking algorithm on tap. I mean, it's super focused on giving you what you may be searching for. Even over here on the left, I know it's kind of hard to see, some of it's cut off, but in order of what I may be searching for, construction, real estate related stuff, sports and entertainment, consumer electronics, apparel. Those are kind of the things that have been looking for on the internet at some point, in order, basically. Vehicle parts and accessories, that's all true. Industrial machinery. So they're really heavy on that. Next, we're going to look at Alibaba's price action. Okay, so the stock, Alibaba, the stock here, BABA, it's lost almost 10%, 8.64% over the last 8 years or so. That's not good. In US dollars, I'm not sure in other currencies, maybe it's doing better. I think actually the Chinese currency is tied to the dollar, more or less. It floats a little bit, but for the most part, it's pegged. And so Alibaba has not been a good investment over the last 8 years. In fact, it hasn't been a good investment over the last 5 years. It's down 52.59%. That's a 5-year investment. Yeah, go put that in your portfolio, right? 1 year, virtually in any time frame, it's looking bad. So it's not been doing well. Now, is a lot of that justified? Well, perhaps. At one point, Alibaba used to be like the promised land. Because of such a wide-reaching customer base, they were thought that, okay, they are the money-making machine, they're the future, they're going to take over everything. And to some extent, they have taken over. Like I just mentioned, they have the widest consumer base in the entire world. However, they have been outcompeted in some metrics. For example, I will compare it soon to JD.com, Jingdong. And we'll see on some of the statistics and some of the valuations, JD is actually doing much better, including, by the way, top line numbers, the revenue. They bring more money in through their channels than Alibaba does. which is very impressive considering how large Alibaba is. Now, next on the agenda, we're going to look at some finances and the 20F. By the way, before we go into that, to wrap up the overview, if you're really interested in that Cayman Island structure, here's a picture of it from their 20F. 20F is a filing that foreign companies must submit in order to be listed in US exchanges every year. It's part of the rules. Alibaba does submit it, although the way they put their figures down is a little bit awkward compared to US accounting, and it's still pretty readable, and one can glean a lot of insight into them. We're gonna look into this further in a second, but before we get into there, at a glance, let's check out what Alibaba has to offer here. The first square I like to look at on stockanalysis.com, which is my favorite free website to look things up. I'm not affiliated with anybody, so don't think I am. I don't even edit these videos. It's just one straight shot. So just get used to it. Get a drink, relax. There's no edits. Just me and you talking. That's it. So this is the revenue. You can see it steadily growing over the years. It has not faltered yet. There hasn't been a year, even through 2020, 21, 22, where revenue has not grown. The earnings have diminished quite a bit compared to the last couple of years, but not to worry. We're only on par, with 2018-ish numbers. So it's not horrible, but it's definitely not great. Some of it is contributed to the way the company is structured. We'll look at that in a second. Before we do that, financials, my favorite tab in the entire world. Let's look at it in yearly first, okay? In annual numbers. Revenue growth, tremendous. Since 2000, and look at this, 2013, 14, it was like 52 billion renminbi. I believe this is in renminbi. All the way up to 853 billion. So quite the growth here. So 5 years back, the stock was priced less, right? So 2020, 19, 18, 17. So 250, the revenue has grown like more than 3 times. More than 3 times in that period. And the price is lower. So that means that all of this growth was already factored into the price of Alibaba, believe it or not. Or it's possible that there's been a lot of decline that's been factored into the price now. So that's also possible. Quarterly look, I just want to show you something that I scoped earlier. Look at these numbers. I'm just going to say these 3 quarters right here in 2022. I'm not saying anything, but they look manufactured. Okay? They look faked. I'm just saying. I'm not saying they're faked. I'm saying they look faked. There's a big difference. Big difference. Why would it just be like an ever increasing revenue growth by 2 renminbi? Okay. But anyway, moving on. I'm going to assume all the figures are good. And I do trust the company. I don't necessarily trust the government personally from a subjective standpoint, but I do trust the company. So net income, the last quarter was actually very good. So this is a lot of income for one quarter. This is on par with some quarters that they've had in previous years. They were very successful. So there is a possibility that the company is just now starting to rebound. So I'm not saying that there isn't a bright future necessarily, but perhaps less bright than one might have thought. They started a buyback program not too long ago, a couple years ago, and this is the result, a very steady decrease in shares outstanding. And they should buy back shares. Why? Because they have a shit ton of cash on their balance sheet, guys. They have a ton of cash. So we're going to go into that in a little bit. A profit margin. To me, the most important margin work. Let me see if you can see this. Yeah, you can. So profit margin, lately has been decreasing in the last 3 or so years. And that's not good news. That's not good news. It's not a steady positive profit margin. It's been negative 1, 2, 3, 4, 5 times in the last 4 years, if you look at individual quarters. Now, in the last quarter, they seem to have regained some of the profit margin they used to be famous for. And Alibaba was valued higher than JD because of their ability to pump profit margin higher. A lot of their logistics or whatever you have going on was software based, and software you can have higher margins on it, whereas a company like JD owned its own operations, and so they had a lot of capital expenditures they need to do in order to get the revenue through. So the profit margin was very low, and it still is pretty low. One could argue that they could ramp it up with scale. They're achieving that scale now, so they could play around with the numbers a little bit. But because Alibaba's having so many problems in so many areas, they got in hot water with the government more than one time, many times, and with change of leadership and whatnot, things have not looked as great and as bright as in the past. And I'll talk about that too. In fact, this might be a good time to mention this. So just looking at the figures and everything, I'm going to keep looking at the 20F and delve deeper into the numbers in a second. But just by looking at the company, it just seems like, tell me your opinion if you disagree with me, and that's fine. I want to hear from you, but it seems like the company is a little bit stagnant now. It seems like it's just a large corporate entity where it's just business as usual, and they're just in the business of surviving. I mean, they do have a lot of initiatives, they call them, and they have a whole section of their company, based on this like innovation that they're trying to pump. But it's such it's traditionally a small part of the company, but it's such a small part of the company where it doesn't seem like things are really catching hold in that division. And it's really hard to actually find information on what exactly is in that division. But we'll get into that in a second. But to me, JD looks like a much hungry company that's constantly stealing market share and now has won the revenue war. So if I had to pick who's the more fierce competitors, I would have to say JD is. Okay, so go into statistics. Let's look at some valuations. First, market cap of 220,000 billion. Sorry, I can speak. 220 billion. These are in dollars. Enterprise values of 167.5, which leaves us with net cash of $51.56 billion. And that is a ton of cash. And I'm happy that they continue to buy shares and return some of that money to equity holders in a form of greater percentage ownership of the claim to profits of the company that's based in China. So that's a good move. They don't want to distribute dividends, that's fine. Although dividends do go through, like I mentioned, I tested it with JD, it works. Plus, I think Tencent also gives out a small dividend, and that goes through as well. So, a ton of cash, guys. They could be reinvesting that. They could be returning it to shareholders, and that's fine. I don't critique them on any of that. Let's take a look at some PE ratios. Currently, it's not looking very good. Price to sales ratio of 1.77. That's not the best. Forward PS, it was also really low for JD. I don't know why they're so low. It was like 0.06 or something like that for JD. It's ridiculous. That's fake news right there. Price to free cash flow is 22.63, which is about on par with like a company like Apple on a free cash flow basis here. EV metrics are even more intriguing because a large part of the company is just cash, right? So EV is the enterprise value, which is the market cap minus the cash. So what is the actual company worth without its cash in the bank account? EV to earnings is 29, which is better. Now, just taking and extrapolating the last quarter on, this number looks a lot better. Okay, so keep that in mind. EV to sales 1.35. EV to free cash flow is 17.3, looking better on the EV metric. And of course, we're gonna look at they don't really have much debt. We're gonna look at the margins. A profit margin of 12.48, I believe, annualized. So that's not bad. Not bad at all. Okay. Next. These are all the main businesses of Alibaba. They're pretty well diversified, in the commerce sector. They got China commerce, you got a bunch of companies that sell direct to consumer, like Taobao, Tmall, etc. They have Fresh Hippo, Alibaba Health, 1688 is a wholesale site. And then they have international commerce, AliExpress. You can buy stuff from AliExpress as a Westerner. Lazada, I think that's Latin American one. So, they have the wholesale Alibaba.com for businesses that I can purchase large amounts of goods directly from manufacturers. It's a little hairy, by the way. I've done it myself, so I have some experience with Alibaba Express, and it's sometimes like I'm not sure. The communication isn't very clear. The way they do business in China is a bit idiosyncratic, even though it's a large country. It's hard to find manufacturers that are reputable in a way that you would think. I'm not saying that there are a lot of fake listings on there, although I'm sure there are some. But the professionalism, what the Westerner considers professionalism, is just done differently over there. So the whole messaging system, it's interesting, it's convenient, it's nice to be able to get what you want. But the negotiations, I'm always feel like I'm walking on glass and just like I'm gonna get cut any moment. And then there's also problems with shipping. And by the way, shipping and duties from China are just enormous. So it's gonna your cost is gonna like double if you go through there, and then you gotta pay the Alibaba fees on top of that, and it just becomes like a very expensive mess. At this point, you might as well just look domestic. I'm serious. I'm serious. So anyway, I just wanted to add that as an aside. They have a logistics wing and a cloud wing. They have Alibaba Cloud and DingTalk. So they have some infrastructure there. So they're very well diversified. Next, I want to go into how it's hard to see on a phone, especially on these numbers, but I'm just going to read them out to you. If you're on a desktop, you might be able to see what's going on here. So the lowest set of bars is actually 2020. The one above it is 2021, and the one way up top is 2022. So these are numbers by revenue from all their different types of parts of their business. So we have China commerce comprising the vast majority of their revenue. Okay, so 592 billion renminbi, and their adjusted EBITDA is 31%, which is great. Okay, so this is their cash cow, basically. That's where they're getting their money in. And then they have international commerce, which is running at a loss. Okay, so compared to 592 billion, international commerce is only 61 billion renminbi is the top line here, is the revenue. So they have a negative adjusted EBITDA of 15%. Okay, so not much of a loss there. That part of the business they're trying to break through, but and they're doing it at a loss. Local consumer services are also ran at a loss, a much bigger loss. So the revenue is 43.5 billion renminbi, and they're running an adjusted EBITDA of negative 50%. So Cainiao, I don't know how to pronounce that honestly, is 46 billion adjusted EBITDA margin of -3%. And then cloud is actually positive. So compared to previous years, so this is last year. Compared to previous years, the margin looks like this, okay? In 2021, their main business experienced a 53% adjusted EBITDA. And then in 2021, 43, and now it's down to 31. So from 53 to 43 to 31. So the margin is getting reduced and reduced and reduced. International commerce, it was -13, -10, -15. So it's about the same, really. It's supposed to be going more and more positive, but it kind of backtracked, last year. Local consumer services, -51, -46, -50. I guess they like to keep it around -50. Kainiao, I don't know how to pronounce that, or actually I don't even know what that business is, so comment in the section what they do. But anyway, it's -2, -8, -2, -3, and cloud actually turned positive. It was -8, -4, and now it's +2% this year. That means it's actually making them some money. I don't know if as a profit margin it's positive, but adjusted EBITDA is +2%, so that's great. So here's what I was talking about: innovation initiatives and others. This thing was running at -169 EBITDA, then 2021 was running at -225, and now this margin is going even further negative at 251. So even though it's a very small part of revenue-wise of their company, it's not going in the correct direction. It's just bleeding money even more and more. Now, I have no idea what's going on in there. It's hard to find information. If you have a good source as to where one can find information about their initiatives, please link it in the comments somewhere. Next, things to continue on this topic. So China, to break that into percentages. This is from the 20th, by the way. You can find a link to it in the profile section on stockanalysis.com, and then you can find your way in there. So China commerce is 67% of the revenue. Huge. Combined with China commerce horse sale. You guys have any horses for sale? Wholesale. So total China commerce, is 69%, which is more than 2/3. A very large percentage of their business, and luckily they have positive profit margin on there. Next, the second largest percent is actually their cloud business at 9% of their total revenue, which is, I guess, higher than in the past, obviously. So it is climbing, and now it's turning a little bit positive, but I think people expected more out of cloud by now. This is my guess. It's probably not growing as far as hard as many people thought. So that's about the percentages. The rest of them are pretty small percentage. Like international is only 5%, maybe 7% of international commerce total of the revenues. So, and then, Kainiao, I don't know. I still don't know what that is. And local consumer services is 5% each. And then we get 4% for digital media and entertainment. That's really small compared to the main business, right? Moving on, these are Alibaba's group holdings total consolidated balance sheet. So assets and liabilities, basically. Now, I try to look at the big items. So 2022 in renminbi here. Well, actually, let's look at it in US dollars, because in 2022 they actually put in US dollars. So the big items, $40 billion of short-term investments. So this is important. Cash and cash equivalents, 30 billion. Then we get equity securities and other investments. Okay, so this is also important here. I want to talk about that. Is restricted cash and receivables, repayments, receivables and other assets. So total current assets of billion. The reason I want to talk about this equities, security investments, and short-term investments is because a lot of the companies in China used to, and I think they still do, is they invest money into each other. All right, so like, what was that? Oh, it's slipping my mind. The group buying company, PDD. So Pinduoduo, right? JD and Alibaba, like they would all own a little bit of shares of each other, and then they would float companies that they spawned, and they would own parts of shares of those companies. So they have like a big local investment portfolio that they all have. But I think they're trending the other way. They're trying to like separate the businesses from each other. I don't know if it's a regulatory initiative or the businesses want to do that by themselves, but that's kind of the trend that I've been noticing. So they have stock in their portfolio. Another thing that's worth of note, by the way, about owning stocks in China as a Chinese company, is that I think the accounting is different there. They actually have to put that in the profit and loss at the end of the year. So if you have capital gains, even if they're unrealized, you will still have to put them down as profits. And I don't know if you get any tax treatment for that. I don't know if you get taxed, even though you don't sell them, but it's real. So when they report their numbers, like, I think that, correct me if I'm wrong, again, put in the comments if you're an expert in Chinese equities, but I think they actually include them in the profit and loss. So if that actually is the case, then it explains a lot about the volatility and the nature of the Chinese stocks, how they seem to go down and up so in an exacerbated manner, and as a group, because they're all tied together and they own each other's equities. And when one goes down, the valuation of the companies go down, then the profit and loss goes down, then which circles back, and it's a vicious cycle to the downside. And I'm sure the same thing works on the upside as well. So anyways, that's worth exploring. Okay, going back to the liabilities side of things, we got bank borrowings, which are very insignificant. In fact, they don't have many liabilities. Accrued expenses, account payable, and other liabilities. That's the big ticket item here. And really, their liabilities are much less than their total assets. So $96 billion versus $267 billion worth of total assets, which leaves us with an equity of $169 billion, which is very close, by the way, to its enterprise value. Enterprise value is 167.57. So it's basically trading at the price of their assets. So that's what it comes out to. All right, look, I think I've talked enough about, I haven't compared it to JD. So valuation metrics, let's compare it to JD real quick. Things of note, okay, that I want to point out. EV to free cash flow. So enterprise value to free cash flow, 17.3. EV to free cash flow for JD, 6.07. Much better for JD. Okay. Alibaba Group, EV to earnings, 29 at the moment. I know it's flawed. EV to earnings, 22. Okay. What was the other ones? Profit margin for Alibaba at the moment, 4.63. I know they had a big quarter, don't worry. Profit margin for JD, 0.99. Okay, fine, 4 times bigger. But like I said, this can be manipulated, right? You know what I mean? So here's something I want to point out. Revenue growth forecast, 7.72 for JD, 7.7 for Alibaba. So analysts are expecting the revenue to grow a little bit quicker for JD. What really gets me is look at the price target difference for Alibaba is 74% higher than this. For JD is 82, but JD is only a buy, whereas Alibaba is a strong buy. Strong buy. If we go to the analyst tab, they actually have a forecast tab for Alibaba, and the low for analysts is 110, which is quite a bit higher than the current price. But I will say that the analysts have been dropping out. So even though there's no analyst having a sell or a strong sell recommendation, there are less strong buys than there used to be, and there are less buys than there used to be. So analysts are kind of getting a little disinterested in this. They don't want to cover this stock anymore. So I thought that was fairly interesting. This is another thing I want to talk about versus JD. Look at this. Owned by insiders, 0.01. This is the main reason why I think it's more of a corporate thing now, and it's a faceless corporation, meaning like no one really wants to drive this company forward. Everybody's just kind of like doing their job and getting their paycheck and now trying to appease the Chinese government. And so they're not really like looking to race someone. You know what I mean? Like looking to compete with another company. No one in there, they're all just kind of pursuing their own corporate agenda, right? They want to rise within the company, get their salary, get their stock, sell them, buy houses for their kids, and, promote their friends or do whatever. I don't know what goes in there. But I'm starting to question, like, okay, what is going to be the driving factor here, right? Jack Ma is no longer in there driving the company. He got fed up, or he got, put down by people in power. And now, who's driving it? It's just becoming like a soulless, entity that nobody really cares about. Insider ownership, 0.01%. Are you kidding me? Look at JD. 6.05% insider owner. That's much bigger. So there's big incentive for insiders to drive the company forward and compete. So I like to see that in a company. I don't like to see low insider ownership. I know the company is really big now and all that, but JD is also a big company. Okay, it's not 200 market cap, but it's 56 billion market cap. That's not too bad, even if it's 4 times lower. The insider ownership, it's so much greater. Let's look at the financials real quick for JD, right? Just the revenue, okay? Nice and steady growth, and it's outpacing Alibaba. I wouldn't be surprised, because JD is pushing so much harder into the outskirts and less populated areas of the country. I would not be surprised if they completely, consolidate them or establish themselves as the winner when it comes to retail in China. Now, I will say, I am a Westerner, right? So I did download all the apps. I downloaded, Tmall, Taobao. I downloaded JD. I downloaded VIP shops when I was doing research on that company. So that worked out well. But I will say that VIP shop or VIP shops has the best app out of all the e-commerce sites. And it's a discount store. So, they get discounted merchandise and they flip it over direct to consumer. So the second best thing was JD. And I got to say, Alibaba's apps, I don't know if it's a cultural thing or whatnot, but they're just messy. They look, the graphics, I don't like them. It's hard to maneuver. It's clunky. Now, I have to say that this is an old information, right? First-hand experience, maybe a year back. So they could have made drastic improvements in the last year. I highly doubt it. But it is possible. So this comment may be invalid. If you're watching this, if you have personal experience with Alibaba websites or apps rather, let me know. I want to know about it, and let me know what you think. so we can figure out like what actually the best investment is in there when it comes to retail. But one thing's for sure, whether you're investing in Alibaba or JD or any of those retail companies, and you're hoping to gain from the fact that the country's retail sector is growing so fast, and it grew so fast in the past, it's pretty disappointing that at the end of it all, we haven't actually gotten anything as investors. Like Alibaba's down 8% in the last 8 years, guys. There's been extreme growth. You saw the revenue lines. Look at the revenue lines from 8 years ago on Alibaba. It's absolutely insane. And here we are sitting at 8%, 9% loss for the last 8 years. How crazy is this? Now, yeah, you can say, okay, yeah, well, the company is extremely undervalued. Fine, but it was extremely undervalued last year, and the year before that, and the year before that, and the year before that, when the price was actually higher than now. So how undervalued is it? So is it going to go undervalued until 50? I like the companies. I think they make money. Like, I like anything that makes money. That has a price. If it's making money, it's worth something, right? And I'm also the opinion, I hear you, that the risks are exaggerated. I think they're too great in the mouths of commentators, but they're actually, the structures are holding in place. Like global commerce is still taking place. The revenue is still going up. Like the VIE ADR structure is still holding. So I don't think, even though I did get burned on Russian equities, I don't think that the structure is about to fall apart. So I'm with you. Yeah, they're extremely undervalued. I calculated JD being undervalued by 3.75 times versus a US company based in the US with similar situation that JD is in. And Alibaba, compared to, a mixture of competitors, probably has the same exact undervaluation rating. So the question is like, okay, either how long do we wait or for things to turn around? Like, is this thing ever going to return capital, or is this just something that emerging markets do? Because it's not just Alibaba. There's a lot of companies in the emerging markets that have grown tremendously. The economies have grown in size multiples, and the stocks have not really benefited from that. Is it like a cultural thing? Is it a strong dollar thing? Like, what is going on there? Why are stocks not benefiting? Like, the people are benefiting, the technology is improving, GDP is rising, growth is going up, and then stocks tanking, not doing anything, flat at best. Absolutely ridiculous. Now, it's hard to invest in this. Personally, I'm not going to put any more money. I mean, a lot of money into this. I have in the past. At one point, my public account was like 40% Chinese stocks, including margins. So it was more than 40%. If you exclude the margin. But I'm not doing that again. It's just, it seems like outside the US, there's just less. I don't know whether it's the government's fault. I don't know if it's a cultural thing. They're trying to keep the profits, under control, so we don't get slapped on the wrist too many times by governments or whatnot. Is it like envy? Is it greed is bad, or whatever the cultural differences are? It's clear, that things are operating different abroad. I have done a lot of traveling myself. I've seen it firsthand. I'll tell you a quick story if you have the time. If you want to cut that video now, it's fine, but I'll tell you a story about Thailand, right? I was in a trip in Thailand, and I was parking in a parking lot. Okay, so I'm going in, and I'm driving in, right? And I'm going to the person who is taking the money for the parking lot. And so there's like one person on the side, So there's two people in the booth. Usually in the US, there's like 0 people in the booth, right? You take a little ticket and you just go in. They have that there too. They have the press button and take a little ticket, but they have this person going out, pressing the button, and then handing you the ticket. That's their job. Okay? That's their sole job. And there's another person out there taking a ticket, plug it in, and then asking you to put the credit card in on the other side. So that's 2 people employed so far in this parking lot. So I drive in, and as I'm turning, there's orange cones that guide you where to go. It's pretty obvious, right? Okay, thank you. So I just follow the orange cones to the left. But no, that's not enough. In between every single orange cone, as I'm taking my left turn, there's a guy there going like this. Go this way. Go to the left. I'm like, are you serious? You have like 7 people in between. There's one person in between each cone telling me like where I have to park where I have to turn to continue into the parking lot when it's completely obvious, right? It's bordered by the orange cones. Like, so now you have 9 people being employed by this parking lot, this private parking lot that collects money off people coming in, that are doing jobs that are completely unnecessary. Completely unnecessary. Maybe hire one security guard to sound the alarm if somebody like steals a car or something. But that's it. Like, what do you need all these 9 people for? They're literally just doing this the entire day, and I don't know how much they're getting paid. But it's so inefficient. Like, what? It just blew my mind. I could not believe what I was looking at. So I've seen a lot of these inefficiencies around the world when I was traveling. I mean, I was in Australia, right? Personal story number 2. And I'm like, I'm going to KFC because it's the only thing open at night. It was in the middle of the night. So KFC in Australia. And for those of you that don't know, KFC stands for Kentucky Fried Chicken. Or now it's called Kitchen Fried Chicken. I don't know. So KFC, it sells chicken, okay? It's just all about chicken. And I go into the drive-thru and I'm like, oh, could I have the number 1 or whatever, or number 2? I don't know what it is. And they go, oh, or chicken sandwich, let's say. It's like, oh, we're out of that. I'm like, okay, that's fine. First of all, in the States, you go to KFC, they'll never be out of anything, at least in the major areas. And I was in a major area. I was in Melbourne, and they won't be out of stuff, even in the middle of the night. So that I'm like, okay, fine. Then just can I have some chicken breasts? And it's like, oh, we out of those. I'm like, okay, so you're out of chicken sandwiches, you're out of chicken breasts, like, let's see, what can I get around here, right? I'm like, can I get like some chicken popcorn or something? I don't know, just something to eat. I'm starving. And they go, oh no. I'm like, well, how do you not have that either? Like, what's going on? So, and then he tells me after like 1 minute of doing this, he goes, oh, we're out of chicken. I'm like, KFC is out of chicken? Are you kidding me? So what are you selling? Like coleslaw and fries? Like that's all you got to sell? Just shut down the store. I mean, come on, man. Like, how are you out of chicken? You're KFC. It was just the most ridiculous thing I've ever seen in my life. But this is the kind of inefficiency I'm talking about. Like, when you go to some countries, I'm not a US elitist or anything. I know that things have ran very well in many parts of the world. I've been to like Netherlands and stuff, and in Germany I've seen like how pinpoint accurate the trains are to the second and everything else. So I'm not bashing on other countries. I'm just saying that in emerging markets especially, like at least the ones that I've seen firsthand, there's a ton of inefficiencies in there. And I think that it probably contributes to the slow, kind of the slowness of the way things are done over there, and perhaps it weighs on the growth of at least bigger companies, which are even harder and harder to manage. So it could be a cultural component, it could be some of that. So I don't know what it is, but it just seems like investors cannot extract money that they put into emerging markets in a lot of foreign countries around the world. So that's just my observation. I don't know if it was valuable to you. Like, hopefully you found that valuable. But this should conclude my overview of Alibaba. If I'm going in with small numbers. This is not a recommendation. You can do whatever you think is best for your own account. This is not financial advice, of course. You got to make your own decisions and make sure that there's risk in the markets when you invest, and you could suffer a complete total loss of capital. So that is a possibility. Personally, for my own account, I plan on just maybe dipping my toes in there, just because of the risk reward ratio and just treating the equities in China as an option. All right, that's going to conclude the Alibaba overview here. Mic drop. Wait, I'm supposed to stop recording.